What is a bearish swing trade, Noah, in your own words?
A bearish swing trade. Trying to take advantage of price cycle in existing bearish downtrend, or bearish or forming, existing or forming bearish downtrend. It's usually going to be 10 days or less, statistically speaking, but you're just trying to take advantage of short-term price cycles. I look for companies that have weak fundamentals that are in existing downtrends and that have a current bearish technical pattern for timing. So we're trying to take advantage of a good technical setup where we have a reason to believe that the sellers are going to step up and start selling again, and prices will drop in the short term.
Mm-hmm. Mm-hmm. Matt, how do you define a bearish swing trade?
Bearish swing trade, basically we're looking at bearish downtrends. The two patterns you're specifically looking at in a bearish downtrend is the bearish retracement and the bearish breakdown. Bearish retracement is simply, basically, if I were to come here and if I were to draw it, for example, so if I get a nice little drawing tool, okay, so that would be a lower high, lower low. So when this resistance level is broken right there, when that resistance level is broken right there, that's a breakdown. When this retraces back into resistance and confirms back down, that's a retracement. That's basically what it is. So we're looking at whenever it breaks support, that's the bearish breakdown. Whenever it retraces back into resistance, that's bearish retracement. Those are your two technical patterns that you should focus on when you are a new trader. When you get to more of a veteran trader, you can start talking about bearish continuation patterns and whatnot. But I've always found that trend trading is much, much better than non-trend trading. So that's what your focus should be on.
I agree, and actually I got a really good pick from Matt. You tell me if you guys do the same thing with the scouting reports I do. I go through all of them over the weekend, and then I just handpick the ones I like the best and trade those, okay? So out of all the bear picks, Matt, the one I actually liked the best was Schlumberger, SLB, which is a bearish retracement. And I think you can use it as an example of what you just drew there, because it's a breakdown. You have that big candle, which was earnings, by the way. It then has had the green candles coming back up, and even now here today, we haven't quite got confirmation this week. But now it's starting to show some behavior in these candlesticks that are triggering, inducing. We would need a confirmation tomorrow. Does this one fit a bear retracement to you, Matt?
It does fit a bearish retracement, and the reason it fits a bearish retracement, if you guys will remember back to Master Trader, a bearish retracement it's got to retrace a certain percentage back up into resistance, and it's got to have a certain amount of days. This certainly does fit that parameter. And when you're looking for a bearish trade, Tim said this has not confirmed yet. Why has this trade not confirmed yet? Why is this trade not confirmed? It hasn't done something. What hasn't it done? It hasn't confirmed because it hasn't went below the previous low. Thank you very much, Paul. Thank you, Franco. So it hasn't confirmed yet. But what does this candle, this far right candle, what does that indicate to you guys? Indicates that it wants it, right? That it wants it. There's a potential reversal, a change in direction. Now, given the fact that oil's at resistance and at the high point with the potential of it coming back down, could this really help a trade on Schlumberger? Yeah. And you don't have to do that correlation or intermarket analysis, guys, but that just leads to a higher probable setup, all right? So once we identify a good bearish trade, and I'll be the first to admit, guys, Tim scanned for bearish trades today. I scanned for bearish trades today. The scouting reports had bearish trades in it. And with how bullish the market is, it's been really difficult to find a great bearish trade. Would you guys agree with that?
I like a good challenge.
It has. It's been very difficult, right? It's like, wow, I like Hero, you put a question into the clubhouse. You said, I need to add bearish delta, right? But I'm having a hard time. My bullish delta is getting out of whack because things keep going up. And And that's a good thing, Hero, because you're bullish delta and the market's going up. That's going to be really, really good for you. But at the same time, you're like, hey, man, the market's kind of overextended. I want to add a couple bearish trades. And so that's when it's becoming a little difficult. And so something like a Schlumberger here, that's enticing to us. So after you found a trade that you want to trade, before you trade it, guys, you have to do what's called prep. So everybody write the word prep into chat. Got prep to trade, right? So there are three things that we have to have when we prep a trade, and I'll put them into chat. The first one is you have to get your entry price. The second one, you have to get your stop loss. And the third one is you have to get your target. Those are the three things you have to get. We call that the set method, is what we call it, okay? So stop loss, entry, target. Now, every one of those, stop loss, entry, and target, those aren't random, remember? Okay, remember back to the training you had with Noah or myself or Tim, whether it was in Master Trader or our basic training or even in some of the videos we've done here at Tackle, those rules, they are rules dependent. So I will write the rules down. So here's your entry. If it's before confirmation, like this is, it is 10% of the ATR under the low. Okay? Now that's an aggressive entry. If you're an aggressive trader, that's perfectly fine. If you're more of a cautious trader, you're more conservative in your trading, you're more risk adverse in your trading, you want to wait for it to close first. You want to wait for it to confirm first and then make the trade second. Does that make sense?
Mm-hmm.
Okay, good. So this is not confirmed. So we're going to take the low of today, which is 63.93. The ATR will just round to $1.20. 12 cents underneath 63.93 is 63.81. So I'm going to enter into this trade upon it moving down underneath the low at 63.81. And again, that's just 10% of the ATR below the low of the before the low of the day. Does everybody understand how I got that number? Again, the entry is 63.81.
Mm-hmm.
Okay, good. Now, the second thing you have to get is you have to get your stop loss. And this is where there's some subjective analysis to it. And the reason I say that is you have to identify a resistance level, right? And some traders might say, well, let's go right there. That's resistance. Some traders might go, well, let's go to the very high of the day, and that's resistance, right? And which one's more accurate? Neither. They're both accurate. It's like I said, it's subjective. Okay, it's you putting a number to it, right? They're both good. You're putting a number to it. I typically look to where the data goes, and so I got some information here. I got some information there. Sometimes, if I want to get a little better picture of it, what is a technique, Tim? Or let me ask the class. What is a technique that I could use to maybe look at where that resistance level is a little more clearer?
Mark.
Yeah, I could drop down the time frame.
Good.
Great job, guys. So I can drop down the time frame to, say, a 15-minute chart, right? And I'm going to look at where this 15-minute chart is. And I'm looking at this, and I say, okay, I got all this information here, but then I got quite a bit of information up here, too. So I'm going to use this very top because there's a lot of data up there, right? So I'm going to look at this very top up here, and that very top, let me get a crosshair so I can get an exact number here. There we go. I'm going to go right there, and I'm going to go 64.75, Tim. And that is just the very top of that range. Does that make sense, everybody? Okay. So what I did here, guys, a technique for you guys could use in the future is when you're having a hard time determining exactly where resistance is because you have multiple different things on the daily chart, drop it down into a 15-minute chart and just get a bird's eye view. And guys, if I'll tell you right now, let's say this data here did not exist, right? This data here did not exist. and all I had was just this one data point right here that set it at 64.75. I would have used this one at 64.50. Okay, but because there was all this data up here at 64.75, that's what I'm going to use. Now, the rule of thumb here is, let's drop this back down into a daily chart here, ladies and gentlemen. So right here, this upper blue line, that's at 64.75. Now, the rule is 1/2 the ATR above that level, right? So if the ATR is $1.20, what is 1/2 of $1.20? Good job, Cindy. 60 cents. So 60 cents is always above that resistance level. That would put our resistance level at 65.25, 65.35, 65.35. Now I got my entry at 63.81. I got my stop loss at 65.35. Okay, and again, that was just 1/2 the ATR above the resistance level. The next thing I have to do is I have to project where I think it's going to go into the future. Now let me erase where are you? Remove my lines. There we go. Okay, so now I got my entry and I got my stop loss. The last thing I got to get is my target. And yes, Tim loves the Fibonacci's, but let's identify a few techniques before we talk Fibonacci. So what are some techniques I could use to project where this stock might go in the future?
Well, I could go ask about a dozen kids out on the street, and I'm sure it's just as likely to get a prediction. By the way, it's Halloween.
It's true.
You could use your pay, like Marquis says.
Okay, so let's list out all the different methods for a second. So we got the pay, and I'll describe what pay is here in just one second. You have Fibonacci extensions, okay, which have been used for close to 100 years now. Okay, you have previous levels of support, as you have. Mm-hmm. You have significant whole numbers as well. So when I'm looking at that, one of my standard targeting techniques is I use pay is what I use. And for those of you who need a little bit of review on pay, let me just kind of explain it very quickly. Pay is basically the average life cycle in a trend is what it is. And you heard Noah talk about this. So if this is what your trend looks like, this is kind of what your trend looks like here. All right. So what is the average life cycle in this trend, right? So if this goes from 110 down to 96, that moves 14 points. And if your next life cycle from this resistance at 105 down to 90 moves 15 points, what we would say is the average price movement is 1450. It really is as simple as that, guys. All we're doing is we're taking the history of something, we're averaging the history of the two previous movements, and we're using that history to project what the average yield would be. At the end of the day, all we're saying is the stock's going to do what it typically on average does. That's all we're going to say. Okay, so if I use that technique, coming back to SLP here, if I use that technique, and I'm just going to draw some boxes so you can kind of see a little bit of the yield. This is not a perfect example by no means. The first one goes from 69 down to 63. So the first price movement goes from 69 to 63, which is $6. The second one goes from, we'll call 69.50 down to 62. 69.50 down to 62 is $7.50. That averages out to be $6.75. So your target would be $6.75. Now, the question is, do I take that target off my entry price, or do I take that target off my pivot price, which is resistance? Yeah, we're going to take it off the pivot price, right? We're going to take it off the pivot price because, again, think back to what you're looking at here. You're not analyzing where you hypothetically would have bought on confirmation. You're analyzing the very high to the very low, the very high to the very low. So let's pull out a calculator here. So if your current resistance level is at 64.75, and we already determined that, if your current resistance level is 64.75, minus your target of 675, that means you have a price target of $58. Okay, does everybody understand how I got to $58?